Now, ideally, the rule of three says that you should look at three different time frames with different perspectives. You cannot look at the trend on three different time frames. You have to look at levels of support, resistance. You have to look at trends. Maybe you can look at trend lines, Fibonacci levels, whatever. But the correct larger picture is when you look at different time frames for different perspectives. It helps in understanding the larger context of the picture. Let's define the first thing. Let's define the holding time frame. Now, this often becomes a matter of confusion for a lot of traders. The holding time frame is a time frame that you are trading on, the time frame that you have identified the setup conditions. Now, we'll be having a look at one example of a trade which is just taken on the USD/JPY on the 1 hour time frame. So we looked at the divergence here. So when I'm talking about the divergence, you could trade on any time frame. You could be trading on the 5 minutes, you could be trading on the daily. But the holding time frame is very necessarily defined as the time frame that you're looking for a trading setup. You may look for a crossover of the moving average for volume, crossover of the MACD signal lines. You can look at pivot levels, whatever. But let's say that whatever time frame that you are looking at, that becomes your holding time frame. It's very important to identify and define the holding time frame. Now, once that is defined, then let's get on to the rule of three. This is the crux of this entire presentation. This is the important part. This is the rule of three. What we do is we identify the setup conditions of the technique on the holding time frame, whatever time frame we are trading on. The next higher time frame, as per the MetaTrader that we just looked at, should be used to look for support resistance levels. Then the second higher time frame should be used to look at the trend, to identify the trend. Now, this is the rule of three which I have been using for a very long time, something which I teach, something which my traders follow, and it works very, very well, because this combination of the correct time frames and the correct or the different factors that you're looking at give you an excellent picture of the overall price action. Now, putting it down to the perspective into the MetaTrader, let's say that if you're trading on the 1 hour time frame, that means you're looking at the setup conditions of your technique, your strategy on this particular time frame. Then the rule of three applying would be your 1 hour becomes your holding time frame. You look at the next one on the MetaTrader, which is your 4 hour. You determine levels of support resistance on the 4 hour, and you look on the daily to identify the trend, to look at the trend. Now, let's get one thing clear over here, or just before we go ahead. Similarly, the other time frames, just as examples, should be used along similar lines. So if you're trading on the 5 minutes, your 15 minutes becomes your support resistance levels to look for support resistance levels. The 1 hour should be used to look at the trend. Similarly, if you're trading on the daily time frame, you should look on the weekly for support resistance levels, future or higher support resistance levels, and monthly to identify the trend. Now, let's just look at the trend. Let's say that you're trading on the daily time frame, just as an example. You look at the weekly to determine levels of support resistance, and let's say you're looking for a long trade for whatever. Let's say I'm looking at a crossover of a moving average, right? On a daily time frame, I see that the 13 moving average has crossed the 34 moving average, which is a standard configuration. So I go long based on that. I will probably look at the weekly time frame to look at where the expected levels of support resistance are. I'm going long. And if I look at the monthly, and I see that the trend on the monthly is down. All right, let's go over the chart. This is one trade that we just had a look at, or this is something that we just, I didn't trade it. Is one of my students or one of the traders took this trade. I did not trade it, but it's an excellent example, a perspective about multiple time frames, right? Looking at the USD/JPY, where is my annotation tool? Just give me one moment. Now, what we were looking for, as soon as price found support over here, it started moving up. We were looking for some targets toward the upside. Now, what was the reason for looking at this move towards the upside? What is the reason for it? Right, what we had a look at here was a divergence. You can see that price has made a kind of a double bottom over here, and your stochastics gave higher highs. This is a classical bullish divergence. This in fact is a bullish divergence class B. It's not a class A. Okay, Ahmed, we'll come back to that. So this was a class B divergence, and a divergence is one of the most effective trading techniques that I have used. I still use it, very effective. So we were looking for movements for price towards the upside, and once we started looking for moves towards the upside, let's have a look at how we use the different time frames over here. Right, the first thing is, if I'm looking at, this is the 1 hour, I looked at the 1 hour. The first thing is we look at the next higher term time frame for your levels of support resistance. And mind it, we are at a stage where we have not yet taken the trade. We are looking to go long, so we go ahead to the 4 hours. On the 4 hours, let me just zoom it inside. On the 4 hours, we had levels of support resistance. I could identify a very strong level over here. Right, we identified a very strong level of support. So price bounced off a level of support. Now, levels of support resistance, ideally a practical tip, is any level which turns from support to resistance is always a very good level. So this was a resistance turned into support. So this was a good level. So longs were justified here because price bounced off a support level. As far as looking for targets towards the upside, this has been on an uptrend for a very long time. There is no previous high, so I do not have a previous level of resistance. So the only level of resistance that I can look for is that price may come to the high. Right, so we were looking at levels of support resistance. Now we shift over on this. Now let's first get over this. Now we shift over to the daily time frame. You can see that the trend is definitely towards the upside. So it's a long trend, and if we get a long trade remaining in the direction of the longer term trend, makes a lot of sense. It kind of, what I say is, it puts the wind in your sails. The trade tends to go further and further. So this was an excellent trade as far as the rule of 3 was concerned. Let's touch upon one more point about the indicators. On the bar, I'm using the stochastics over here. I generally use only the stochastics, mainly to determine the divergence. And as you can see over here, the stochastics, because of the way they are built, because of the way they are calculated, they give excellent indications of oversold, overbought levels, which in turn give excellent indications of divergence. It gives better divergence ups than the MACD, the RSI. It is just from my personal experience. So I use the stochastics, and as you can see over here, there was an excellent divergence. When I'm looking for levels of support resistance on the 4 hour, there are no indicators. I don't need indicators. I'm looking at price action. On the daily time frame, though the trend is clearly visible over here, there are two things to look at the trend that you can effectively use. The MACD is an excellent indicator to determine your longer term trends, only because of the histograms. The MACD histograms have got some excellent qualities, and as you can see over here, there does not seem to be any loss of momentum. Price is going on the high, it's making high, your histograms are making higher highs. So the trend or your momentum, underlying momentum, is still very strong. There does not look to be any chance of a reversal or even a pullback at this stage. So if you're trading on the USD JPY, it's advisable to remain long, because your longer term trend is definitely, the momentum is definitely, underlying momentum is very strong. The other indicator that you can use on a longer term time frame is a moving average. Believe me, the moving average, I consider the moving average to be one of the most lagging indicators. But if you look for it to identify trends or even levels of support resistance, it's an excellent indicator. You have to get the correct fit on a daily time frame. You need the correct number to it or the correct setting to it. But I prefer the MACD. So this is based on this situation. Okay, now let's do one thing. As Raymond said, let's have a look at, Raymond was asking on the daily, all right? Daily, weekly, 4 hour daily, weekly, all right. And Ahmed, coming on to that, my time frames that I use are the ones which Raymond described. I generally trade on the 4 hours, looking at the daily and weekly. maybe on the 1 hour, but not lower than that. I prefer higher term time frames.